Alright, so today's story is crazy. We're serious, every investor needs to know this. And we're of course talking about the Tesla stock getting added to the S&P 500. That's right. Tesla will finally get added to the S&P 500. In this video, we will go through exactly how this happened and what to do now. And in the end, we even got a special announcement to make. But before we jump into the details and tell you step by step how you can make a ton of money with this new possible buy opportunity on Tesla stock, please make sure to subscribe. Videos like this take a lot of effort to make, and your sub would be the best imaginable reward for us. Thank you really much. But let's jump into the video now. So in a move investors have long anticipated, S&P Global, the body that manages some of the most prominent stock indices in the US, announced on Monday that Tesla will be joining the S&P 500 index. This should happen before trading commences on Monday, December 21st. As a result, Tesla stock jumped enormously on the news and is currently up more than 14% in after-hours trading. The electric vehicle maker was widely expected to make the cut in early September during the index's quarterly rebalancing, but it failed to make the list at that time. Tesla stock has skyrocketed so far in 2020, gaining 388% as of the market close on Monday, pushing its market cap to nearly $387 billion. Because of the size of the addition, officials have yet to decide whether Tesla will be added all at once on the effective date or if it will be divided into two separate tranches to be completed by the December 21 deadline. S&P Global has taken the unusual step of eliciting investor feedback before making the decision. Being included in the index not only confers bragging rights but could also help push shares even higher as mutual funds, exchange-traded funds, and others that track the S&P 500 will be adding the stock to their portfolios. This increase in demand is likely to provide a temporary boost for Tesla's shares. In mid-July, Tesla announced its fourth consecutive quarter of GAAP, generally accepted accounting principles profitability, one of the last remaining hurdles the company needed to clear to be considered for inclusion in the index. However, Tesla was initially passed over, leaving some investors scratching their heads as to why. Some Wall Street analysts have speculated that the stock's well-known volatility may have factored into the previous decision to snub Tesla. Others have suggested that the sale of regulatory credits and the part that played in the company's profits may have also weighed on the verdict. So though 2020 has been challenging for many companies, it's been a blockbuster success for Tesla. The company recently reported its fifth consecutive quarter of profits, and its top and bottom lines are surging. With such staggering momentum even amid a pandemic, shares of the electric car maker have skyrocketed. Tesla now has a market capitalization of about $400 billion, up from $63 billion 1 year ago. With Tesla shares surging nearly 500% over the past year, the automaker will be among the top 10 most valuable companies in the S&P 500. Since the S&P 500 index is market cap weighted, the index and other funds that mimic the index will need to build a substantial position in the stock. But while it certainly seems like there's a good chance that demand for Tesla shares will exceed supply in the coming months, moving the stock price higher, investors shouldn't count on it. The stock could be impacted by a number of unexpected company-specific or broader market factors. Investors should invest in Tesla based on their analysis of its value today in relation to its long-term prospects rather than on short-term stock price movement expectations. By investing based on an underlying reason beyond the potential near-term S&P 500 inclusion catalyst, investors will be better able to endure any unexpected volatility. Nevertheless, Tesla stock's inclusion in the S&P 500 comes just as the automaker has been demonstrating consistent growth and execution. The stock's inclusion validates the company, which has built a business that can fund its expansion plans, primarily with its own internally generated cash flows. In the trailing 12 months, Tesla has impressively generated $1.8 billion of free cash flow, and this could grow dramatically in the coming years along with the company. The automaker is still very early in its growth story. Indeed, analysts, on average, currently expect Tesla's revenue to grow 45% next year and earnings per share to nearly double over the same time frame. For investors who believe in Tesla's business and in the long-term potential for electric cars to take share from gas cars, initiating a small position in the automaker's stock could be a good idea, but not on the basis that shares will rise in the near term. Instead, investors should expect significant volatility and should monitor the company's ongoing performance, just as they would for any individual stock in their portfolio. Still, if the automaker can successfully capitalize on the enormous growth opportunity in front of it, an investment in the stock today could prove to be rewarding over the long haul. Alright, this is it for today's video. If you like this video and want to support our mission of providing free financial information, please ensure you're subscribed and definitely consider leaving a like. It really means the world to us. Thank you very much and see you next time.